Good afternoon, guys. I think we're live on Blokes with Beards Talking Business, episode 1. You'll have to forgive us because we're complete technophobes and we're not even confident that we're speaking to anybody. We might be speaking to an empty room, but we're going to do our best here. So, quick introductions. I'm Alan. I run Acumenica. I'm the dull accountant of the three. Chris is the financial advisor, and Mark is the lawyer. I'm going to quickly throw it to Mark now because he wants to, as lawyers do, he wants to stick up a disclaimer. We couldn't figure out how to put it on screen, so he's going to read it instead. Go for it, Mark.
Hi guys, hopefully everyone can hear me. Chris and Alan, can you hear me all right?
We can hear you fine.
Lovely.
Brilliant. So basically, this is just a quick disclaimer to let you know that this isn't formal legal advice. So basically, there's three of us on the panel. We're going to give you guidance and information in response to any questions you might have about your business. But those answers are for general information only, and they're not formal advice. We don't have enough detail about you or your specific circumstances to give you a full professional opinion. And so we're only really able to give brief answers in the time that we have. If you do need a more detailed response, you might wish to consult one or more of the panel members separately. And obviously, we're not your professional advisors, so no client relationship is created here. That relationship would only be formed if and when you hire any of us individually and sign an engagement agreement. So that's all the rubbish.
Like a true lawyer.
Well done, Mark. Thank you very much for that. So while we are waiting on live questions coming in, I've got to be honest, we don't know how that works. So it looks like you just put the question in the comments underneath in the live feed, and they will somehow appear in our feed and we'll be able to answer them. But we've got a couple of pre-sent questions. The first one probably for Chris to answer because it's kind of around pensions and stuff. So the question is, I've just set up a consultancy company. I'm going to be generating about 100k in after-tax profits per year. I'm 57, so looking to retire soon, and I want to use the company to provide for my retirement and be as tax efficient as possible. At the moment, I need about 45k per year for my day-to-day living. So what would you suggest the guy does here, Chris?
You said he set up a consultancy business, did you?
A consultancy company, yeah.
So the beauty really of just looking out for number one, shareholders, stakeholders, things like that to be worrying about. So the planning options are vast. Now, if you've got your 45 grand that you need, you can pretty much cover that off mostly with a nice tax efficient salary, as I'm sure Alan would point you towards, tax efficient salary and taking your dividends up to the higher rate thresholds, which is there or thereabouts going to cover the income that you need. All the profits over that, which you've, from the sound of it, got pretty much, let's call it 50 grand to keep the numbers round. You've then got to decide how you're going to use that for your retirement. So I don't have a clue what you've already got. Not sure how much state pension you qualify for, but let's just assume that as a starter for 10, you haven't got any pensions, so you need to start going hard and you've got a bit of state pension. You can take that 50 grand, you could either draw it out of the business, but the big problem with that is you're going to pay corporation tax on it, which is pretty much 25 grand, give or take a really annoying sliding scale that now exists, 25%, sorry. And then you've got to pay dividend tax to get it out. You're in that beautiful position where you can just pump everything you don't need for your daily living into pensions. So rather than 50 grand ending up as about 25 grand after you've paid corporation tax and personal tax on it, you've got 50 grand straight in your pension from day one, which is, I mean, it's going to turbocharge getting you to where you want to be. You can do that for the next few years. I mean, you can get to that money pretty much straight away if you are, I think, 57, Alan said. So there's not too much of an issue with getting to it. The only question that I can't answer is how much you actually need to put away to get you where you need to be, because I don't know where you are now or how much you're going to need when you stop. But pensions, for someone in your situation where you're running a consultancy company and you can make the most of them, are probably going to be the most efficient way to build up your pot so that you can stop or wind down or split things however you want to be.
Thanks, Chris. This particular client this particular chap is a client of mine, so I tend to know a wee bit more than if it was just a random question. He wants as much. Basically, he wants to put as much into the pension. So what he needs to get to where he is. So normally you would work back from what he needs per month or what have you. He just wants to put as much into the pension, and what he gets out is what he gets out. So if there's 50 grand spare in the company, 50 grand's going to go into pension if that's what's in with his allowances and so forth. So it's less of a this is what I need situation.
Yeah, it's how to get the most bang for your buck.
Correct. So, has anybody got any questions? Come on.
Where's that wave of questions we were expecting? I thought it was a tidal wave. It was just going to come and knock us off our feet.
People promised me some really tough questions, so come on, let us have them. They're not too tough, but
I'll chuck a question at you, Mark, which someone actually asked me just the other day.
Okay.
Because I brought up their terms and conditions, and you pretty much are, that is right up your street, helping businesses get all their legals all sorted.
Yep.
And their first comment to me was, well, I just downloaded some off the internet for 20 quid.
Mm-hmm.
Why do I have to pay someone to do them? Are they not all pretty much broadly the same?
Yeah, that's a good question. I mean, I get asked similar things quite a lot. And my wife is a photographer, and so she works with a lot of photographers who have case management systems that include templates, T's and C's and whatnot. And I've had a look through quite a lot of them, and some of them are okay, but sadly, many of them are rubbish. And so you might accidentally find an okay one online somewhere that covers all the things you need it to cover, but there is a lot of benefit to getting a lawyer to sit down with you if you do want to really protect yourself and draft a set of T's and C's that will be bespoke to you and your business and cover all of your key risks. The risk with having a template that's taken off the internet, or what I call worse than that, a Frankenstein contract, which is pulling together all different things from different parts of the internet, is that they might be incoherent. They might not link up together, so there's tension from one clause to another, and they might just not be suitable for what your business is doing, because the point about a template is it's designed to kind of catch most people, but not everyone. So if you have unique risks to your business, they might not be captured by a template. So I suppose my answer, a shorter answer, would be a lot of them are rubbish. So a lawyer would be able to do a better job.
Cool, excellent. So there's actually some questions coming in, guys. So let's go for it. Lawrence is asking, he's invoicing at the end of the month. What financial year does the money fall into, i.e. when invoiced or when cash received? If you are a limited company, Lawrence, if you operate a limited company, and I happen to know you do, again, another client of mine, guys. So if your financial year ends the 31st of March, say, and you operate your accounting on a accruals basis, which is basically when invoiced what counts. If you operate on a cash basis, it's when the cash is received that counts. For accounting purposes, generally speaking, you go accruals based, but for tax purposes, you can opt to make it one way or the other. And for VAT purposes, generally speaking, we would go on a cash basis, so you pay VAT as and when the cash comes in. Simon is asking, how much money do you think you need to keep as cash in your bank account, and how much should you invest? I know it depends on lifestyle, but what's a safe amount to keep and what should be invested? Now, Simon, I don't know you, but I suspect that might be how much money should you keep in your business. If that's the case, it's certainly a how long's a piece of string question. As Chris and Mark and I were discussing beforehand, a lot of these questions are going to have to be, or a lot of the answers are going to have to be prefixed with "it depends," and this one really does depend. what we like to think is a kind of rule of thumb is if you've got 3 to 4 months of your runway, so essentially your running costs, if you've got 3 to 4 months in the business account, then that gives you enough money to keep you kind of liquid for the length of time that you need. I know Microsoft, Bill Gates used to always say that you must have 12 months of total cost in the business at all times, just to make sure that everything can be covered. If it's your personal income and so on and so forth, that would be difficult for me to say because I really focus on the business side of things. But I guess maybe Chris could maybe have an idea of that. Sorry, Chris, maybe threw you under the bus a wee bit there. But
No, that's fine. Yeah, I mean, from the business side of things as well, I guess there's other little curveballs to think about. Like if you're in an industry where your clients are going to look at your balance sheets, if your potential clients are going to want to look at the financial security of the business, if they want to see healthy amounts in the coffers rather than everything being stripped out to pay to yourself, then that might have a bit of an impact on the decision as well. If it is personal, my rule of thumb really is that I want to see at least, there's a few variables, but at least 6 months worth of expenditure covered. So your cost. So if you got ill, you couldn't work, something terrible happened with the business, so you had to stop your income for a while, or you wanted to get out, you want to have enough of a war chest set aside that you're not going to be buggered. If you've got something that's coming up in the next, say, 5 years, a big expense coming up, you can't really be investing that. That's got to be sat in a bank somewhere where it's safe. You kind of got to take it on the chin that it's only going to get whatever you're going to be able to get at the bank and nothing more. Money that's for the unknown future, that beyond 5 years, that's what should be working for you harder, being invested, whether it should be invested in something that's going to provide an income, provide capital growth, whether that's property, whether it's stocks and shares. That's the bit that does your hard work. But yeah, personally, I'd say six months is your minimum you want to have, I think, with all your expenses.
and your kind of liquid funds, if you like.
Yeah, that's got to be money you could get your hands on tomorrow if you needed to. Something terrible happened.
Chris, you're getting hammered here because the next question is also relating to pensions. So I'm afraid you're going to have to answer this one as well.
All right, nice.
Pavel is asking, what size of pension pot do you typically need to achieve £600 per month and 1,000 month annuity? That's a question. I don't understand it.
So I'm just going to assume that all that means take annuity out of the equation. I'm assuming that Pavel just wants to know how much he needs to have to be able to get 600 quid a month infinitum or £1,000 a month for however long he's around on this earth.
Right.
And if I was sitting down with him and planning, again, I would look at all the different variables. How much, do you actually need? Blah, blah, blah. But to answer the straight question, if you wanted a rule of thumb, I would say as a starting point, you probably need to take 600 a month. So this is where you see that I don't like numbers, even though financial advisor. So you're about 7,200 quid a year is what you need. There's a bit of tax on that, so call it 9 grand a year that you need before tax. If you times that by 25, that gives you about 225 grand. Now, that is a terribly general rule of thumb. There's a lot of different factors that go into it, but that equates to about 4% a year taken out of the investments, which in most schools of thought would suggest that should be a sustainable amount to take out. So if you're talking about an annuity, in annuity's sake, like giving away the money forever and just getting the income, it's probably not too far off that, but I'd need to know how old you are, if you've got any health conditions to get there. But I'd say, yeah, about 225 for 600 quid a month, and using the same logic, that's going to be about 375 for about £1,000 a month. So just the annual pension add a little bit on for the tax that's going to come off, which would be 20%. So I've grossed that up by 20%, then times it by 25. You should be looking at that kind of ballpark.
Ideal, thank you. I think we'll probably change the name of the live event next week. It depends, will we?
I think so, yeah. I mean, I was worried about calling it Blokes with Beards because this is just pubescent fluff, really. I'm a bit of an imposter in here.
I know. So the next question, I don't know, Mark and Chris, can you see these questions, or am I the only guy that's able to see the questions?
I can see them.
Yeah, I can see them. Yeah.
All right, cool. I'll still be the host.
You can be the compare.
Exactly. Noel Edmonds, right? So, Mark, there's now a couple of questions for you here. So,
yeah.
Lawrence again, obviously on the back of the T&Cs comments that you made earlier on, he's asking, is there a standard best practice set of T's and C's you could recommend?
There is probably a good place to get some template T's and C's if you're willing to pay a little bit of money. The Federation of Small Businesses is something that you can sign up to, and I believe it's an annual fee, although you might have an option to pay it monthly. I don't think it's a huge amount. I think it's maybe about 200 quid, maybe a year, and it does depend on how many people you've got in your business. So if you sign up, you get access to quite a few legal templates, and they're drafted by a reasonably reputable firm. So they should be good. And I've had a look at a few of them, and they're not actually that bad. So if you did want something that wasn't just hunting around on the internet trying to find something that may or may not be good, you might want to look into the FSB and see if you're happy with those templates. Am I able to put a link in here for people to see? Is that something we can do? We're figuring this out as we go, but
it depends on whether the question is it possible, or am I able? I'm sure I'm sure it's possible, but I don't know if you're able, to be honest with you.
Right, okay.
Try sticking it in the comments, Mark.
Sure, let's see what happens here. I've got a private chat function here. That's all I can do. Let us see if this does anything. I don't think it does.
No, hang on. I'll try. Hang on. I'll copy that link.
It may be that only you can do it, Alan. I'm not sure.
I don't think we've got the power, Mark.
We don't.
Subservience.
No. Powerless minions to Alan.
Who can't do it either. Right, so it's fsb.org.uk, guys. I'm a member of the FSB. I didn't use it anywhere near for what I should do, but it's worthwhile. There's a few free things that go with your membership. I can't remember exactly what they are, and I'm no a massive cheerleader for them, so I'm not going to be too concerned about it. But I know there's a lot of legal templates, as Mark just said, and there's free HR advice and HR like redundancy cover or insurance or something. But it's worth looking at. I think you also get tax inquiry insurance, but I don't necessarily want to talk about that because we also offer that. So let's just leave that for the time being, shall we?
Well, I'm not going to promote the FSB templates too much, obviously, because I also do draft contracts for people, so it's a it's a difficult one, isn't it? But I think if you don't want to go to a lawyer, that's my recommendation. Is best practice is if you need to protect your business, go to a lawyer who knows what they're doing and get a proper set of T's and C's set up. If you don't want to do that, or you don't have the funds, then you can look at the FSB and see if they can help you. I know there's other sort of federations and groups that may do similar things, but they're the only one that I have any real knowledge of.
Right. Thank you.
I think,
sorry.
I was just going to say, I think Lee's sort of put a similar question about trying to get software as a service app off the ground, and they need some decent T's and C's drawn up. Again, you might want to go and look at the Federation of Small Businesses to see if they have something. the risk with that is a lot of those templates are quite generic, and for something, when you're looking at software, there are a lot of issues that you need to think about with regards to, for instance, ownership, and there's all sorts of issues around what happens with the code. And obviously, if you're developing it, or if you're, I don't know what the detail is here, Lee, whether you said to someone if this is you, and whether you're going to look at getting it developed for a particular client, or whether it's just a general product you're going to put on the market. But you'll need to think about a lot of things about how you're staging your development, how the testing is done, when it's approved, and so on. So the answer is that there might be a general template on there for use, depending on what it is you need, but it might not be specific enough for an SaaS app. Yes, there we go. Is Lee. Okay, yes, it's me. I'm building it myself. Okay. So, I mean, let's just quickly then, Lee. So are you building it for as a product which you're going to release generally, or are you building it as a commission from a particular client for them?
Here we go. The tension builds now as we wait for Lee.
Come on, Lee. Let's give us some good stuff. No pressure. I think maybe in the future we'll look at getting some form of live interface, if that might help. But at the moment, I think this is the best that LinkedIn can offer, is us sort of waiting around for people to type things. So apologies. Here we go. Generally for multiple clients. Okay. So yeah, so if you're not making it as a bespoke product for a particular client, then maybe the FSB has a set of software user T's and C's that you might want to look at. I think it'd probably take me too long to go and check now, but it's worth having a look. And if you're struggling, drop me a line and I'll see if there's anything else that I can direct you to. As I've said, my recommendation is generally, if it's something like this, particularly with software, is get a lawyer to look over it, because there are a few niche or tricky areas which might trip you up if you just use a general template. Hopefully that's helped.
So it seems to be that some questions are appearing on the software that we're using, some questions are appearing on LinkedIn, some questions are appearing on both, some questions are appearing then disappearing. So we're getting there. So let's bear with us. But we're not far away. Another legal question for you, Mark. Sorry, you're getting hammered here as well. I'm getting away with it. So right, next week it'll be completely different. So Simon's having a problem with his management company within his building regarding service charge. We have a small committee. Are they legally obligated to show us invoices they have paid with their service charge?
Great. I know Simon. So hi, Simon, and thanks for joining us. So yeah, I mean, basically I don't know the full details, but generally for leasehold property, there is typically a right for leaseholders to see how the service charge is being spent. So usually you have a right to ask for a summary showing basically how it's worked out, and then you can ask for any invoices or receipts or anything that might support that. Again, it does depend. There may be some arrangements in place that I'm not aware of, but I think as a general point, you should be within your rights to ask for supporting invoices. Quite an easy one there.
Excellent.
Happy days.
Good work. So I had a question about VAT for overseas clients, and it's vanished. So, oh no.
Open it up on your phone, Paul and are there other questions that are coming through that we're not seeing, Paul, or is that what it is? Okay. Hope this is entertaining for everyone. Let's trying to figure this thing out.
I think so. Polished and refined.
Right. Okay. In the meantime, whilst Alan, you're maybe having a look at that, are you able to see if Nick has is attending? Because I can't see who's attending.
Um,
The reason I asked is because he submitted a question in advance because it was a bit of a tricky one around defamation, and
Right.
I've got a useful answer, but I wanted to make sure he was here to hear it before I.
Right. I've got one quick question. I found this question. So I've got a client who is a consultant, again, surprisingly enough, and he's looking at onboarding an EU overseas client, and he wants to know understand the ramifications of the VAT side of things. Should be charging VAT essentially. So it depends again. If it's a B2B, so a business to business transaction, the place of supply is generally the customer's location. If it's a business to consumer, the place of supply is generally the supplier's location. But we're going to assume it's a B2B because it's, well, it sounds like it's a B2B. So chances are that then means that the place of supply is the customer's location, in which case you wouldn't charge UK VAT. If the customer or the agreement is a B2C, so it's a consumer that you're supplying, then you would need to charge VAT. So that's fairly straightforward there. Gets a wee bit more complicated when it's supply of digital services, and probably isn't the place to explain it here. But Len, if you want to come back to me in greater depth on that, DM or what have you, we'll be glad to help you. Mark, it's probably a good idea for you to go and explain us and talk to us about that defamation question that you had anyway, because if Nick isn't around to hear it, there are others that might be interested.
Okay, sure. It's a really good question, actually. So, Nick, if you are there, then cracking job on this one. So, basically, Nick, he makes podcasts for people, and his job is recording and editing them alongside various other services like Concept generally. And, oh, 1 second, I've just got a message from Nick, actually. It says, I clicked the link and waiting to join for ages. Is there a problem my end? Interesting. Possibly. I don't know. Give me 2 seconds. I'll try and link him into to your feed, Alan. That's probably the best way to do it, isn't it?
Mm-hmm. Definitely.
And then I'll just hold off because he might join in a second. So is there any other questions we can deal with?
This is what happens when you make a LinkedIn Live from pipe cleaners and sticking plasters.
Well, I did have a question actually to chuck at you, Alan, if you don't mind, whilst Mark has a little back and forth with Nick to try and get him in on the party.
Go on.
So I met a lady the other day who runs a virtual assistant business.
Yep.
She's doing it self-employed at the minute.
Uh-huh.
After she's paid away all the staff, it's sort of like 40 grand left over in profits for her. She asked the question, at what stage do I think about incorporating? When does it become a benefit for me?
Presumably because you're asking me, we're talking about tax efficiency.
Yeah, well, everyone always says you should have a limited company or you should be self-employed. There's an argument for one or t'other, really, how you structure the business. And that was exactly why she asked it. She said, well, is there any benefit to me doing it?
Over the past sort of decade or so, the tax benefits of incorporation have steadily been eroded. There's still benefits, but they're much less so. And it's probably only tax efficient, or significantly more tax efficient when you're earning a fair bit more than what your VA is talking about. If it's 40 grand from a tax perspective, I would probably say the inconvenience of having to file accounts at company's house and so forth, and bear in mind that there's new rules in terms of what's going to have to be declared coming up that a P&L is going to appear. So the privacy aspect, it's another issue that needs to be considered. At 40 grand, I would be inclined to say probably not worth it, but it does depend on the individual circumstances. There's the it depends again. Sorry. One thing that you do want to bear in mind is if you incorporate a company, then the way that you're paid is different. So if you're a sole trader, you can just go into your business bank account and help yourself. There isn't a tax issue there. The company's taxed on the profits before anything's taken out with individuals. If it's a limited company, then it gets a wee bit more complicated because the company's taxed on the profits and the individual's taxed on the money that comes out, whether that's in salary or dividend or likely to be a combination of both. But the big thing about a limited company clearly is the limited liability. Although, as Mark will probably come in and help me out on here, there's a lot of piercing of the corporate veil at the moment that happens, that while you think that you've got a limited liability company, creditors, especially HMRC, seem to be particularly good at it, seem to be able to get through the pierce the corporate veil, and any liabilities that should be with the company can then land on the directors stroke shareholders' feet. Generally, the directors, I think it's fair to say, Mark.
Yeah, I mean, that's an interesting point. So one reason that I would always recommend considering a limited company is if you are worried about people getting access to your personal assets for whatever reason that is. Maybe you're in a high risk industry, or maybe that you're just particularly concerned about your personal assets for whatever reason. Then limited company effectively puts a shield around the people who own it. So typically, if there's any debts owed, it will be the company owing them, and creditors can't pursue you personally. The role Alan was referring to with piercing the corporate veil is when maybe HMRC or others can look behind the shield or pierce the shield, break it apart, however you want to look at it, and actually hold the people running the company or people owning it responsible. It's the default position is that there is a shield, so it's rare for the corporate veil to be pierced, but we are seeing it a little bit more. Generally, if you're not doing anything dodgy with your business or with your money, no one's really going to pierce the corporate veil, so you're normally protected. This is a general rule. But if you're doing anything dodgy or shady, then people are more willing to, like the authorities, HMRC, are more willing to look behind it. Effectively, that's my simple take on it. I don't know whether Alan, you'd agree with that, but
I would agree with that almost entirely. But one thing I would add to it is there's an awful lot of businesses at the moment of bounce back loans or took bounce back loans during COVID, and pardon me, are now finding, even after like 2 years out of lockdown, that business is still struggling. But while they have the bounce back loans still sitting there, they're having to repay it at the moment, and a lot of people are finding, well, listen, the business isn't really performing. I'm going to have to put the business into liquidation. And if there's a bounce back loan sitting within a liquidation, then the liquidators are instructed by no HMRC, but is it the British Business Bank that kind of underwrote all the bounce back loans? They've been instructed to take a much more detailed look at how the bounce back loan came into play in the first place, which basically means that if there was anything even in the slightest bit wrong with the application for the BBL, or how what the BBL was used for at the time, and then the company goes into liquidation, then the corporate veil is pierced quite simply, and the bounce back loan becomes the debt of the directors. It's not quite as straightforward as that, but ultimately that's what happens. So that's certainly something worth being careful about. And the issues that may cause problems in terms of BBL is if you misappropriated the funds for use. So the BBL is essentially to keep the business afloat, and if you paid dividends to yourself or paid personal bills for yourself if you're a sole trader, things like that, that's a problem. And if there was anything wrong with the application in terms of maybe padded out your turnover, so that you could get a higher amount, for example, then these things are potentially a problem. So just be careful.
Yeah, exactly. And as you know, as Alan pointed out, generally all those things are, you know, dodgy things. So it's it's a case of just doing everything by the book as far as you can, and that should minimise the risk. And it typically does kick in, or we're more likely to see this happening when the company goes insolvent, because there's much more scrutiny of what the directors did in the years leading up to the insolvency. And also, as a director, you would have separate duties under the Companies Act, you know, including acting in the best interest of the company and so on. So your actions will be scrutinised if the company goes insolvent, and that's possibly when they might start considering piercing the corporate veil.
Mm-hmm.
So I think Nick's in. We've got Nick. He's joined. Nick, can you hear me?
Because never heard the word corporate veil in my life before, but
There you
a lot
go.
of times now.
It's what accountants wear at the weddings. Just one point just before we go into the next question. Just we were talking about the responsibilities that you have during an insolvency. It's worth noting that a company, there's two ways that a company can become insolvent, and that's balance sheet insolvent or cash flow insolvent. Very quickly, balance sheet insolvent means when your assets are lower than your liabilities. So if you look at your balance sheet and it's got a minus figure at the bottom, then that generally means your balance sheet insolvent. Cash flow insolvent means that you basically can't afford to pay your bills as they become due. Again, that's fairly obvious when that happens. If somebody says, "I need you to pay this," and you say, "Well, I can't," well, that means that you're cash flow insolvent. When that happens, and this is why it's important that you've got up-to-date financial information, people, is when that happens, is your responsibilities as a director change. It changes from acting in the best interests of the shareholders of the company to acting in the best interests of the creditors of the company, and that's significantly different. So it's just worth noting and remembering that. So I'm going to throw back to Mark to answer this defamation question now that Nick's in the building. And this is likely to be the last question, guys, because we're running out of time already, believe it or not.
Yeah, you're probably right, and it's a little bit more of an involved one. So I'm going to try and do the best I can to cover the issues, but defamation is a bit of a nuanced field, so we'll cover what we can. So I started reading it before, but I'll just summarise again. Nick's question, he said that he makes podcasts for the people, he records and edits them alongside other services like Concept. And what he was concerned about was that sometimes he'll work for a client who, and they have particularly strong opinions about something or someone, possibly. And his concern was what type of liability he might have under the laws of defamation for anything defamatory said on the podcasts. Now, that's a really good question, and anyone working in this field, you know, it's something to think about. So typically, you will be responsible for a defamatory statement if you're the author or the editor or the publisher. Now, in Nick's case, there's a worry here that he might be classed as an editor, depending on the level of work that he does on the podcast, and he may also be classed as a publisher because he told me that he he sort of hosts these sometimes on platforms, and that would be disseminated to the general public. Now, there are various defences available to defamation, and particularly if you're what we called a secondary publisher, or someone who's innocently published it, i.e. you've put it on a platform and didn't know that there was something defamatory in there. But my view is you don't want to be getting bogged down in technical defences because you're already on the back foot. So really what your best bet is in Nick's situation is to start taking proactive steps to manage the risk before you're putting these podcasts out. So obviously, a few practical steps that you might take. One of them would be to vet your clients before you agree to do podcasts on them. If you're working with a Joe Rogan type, or what's the other chap, Alex, what's his name, who talks about a lot of conspiracy theories and so on, then that might be classed as a higher risk client, and so that might be something in terms of your vetting process that you can work with. The other thing is obviously when you're editing them to make a note of what the content is. And if you hear anything that sounds like it might be defamatory, to have a chat with the client and say, are you sure you want to include this? I'm not entirely comfortable with it. And defamatory comments generally are ones that will affect the reputation of someone else. So it's a bit more nuanced than that, but those are the kind of things that you need to be thinking about. If someone's saying something about someone else and you think it might affect the reputation, could be defamatory, possibly. And then probably from a legal perspective, what you need is a really strong contract with your clients. And there's a couple of things you can include in there. One of them would be that they are fully responsible for the content and everything that they say, and you have no responsibility for that. You're just editing it. Another point you might include is that if you do face a defamation claim as a result of anything they say, that they agree to what we call in law indemnify you. It just means to cover any of your legal costs and or damages that you might have to pay. And you also may include some what we call warranties, which are basically just contractual promises. And so you might include some warranties from your clients that they are not going to say anything that's defamatory in the podcasts. So, and there are a few other things you can do in your contract to make it a little bit clear, including having a right to take it down if someone does complain that there's defamatory material in there. And then from a practical perspective, obviously, once you've put it up, or if you're hosting it and someone does complain, then obviously you need to act quickly and make sure that you check the podcast in question and act quickly to take it down if there is a risk of there being defamatory material in there. So quite a few points there, but I think, this is a huge field. So those are just some practical points to think about. But obviously, Nick, if you've got any more concerns about that, then, do drop me a line and I can try and give you a bit more guidance.
Excellent. Thank you for that, Mark. I think that's just about us, guys. I just noticed there was one quick question came in from Scott Mordrick. Scott, I think I've already answered your question regarding the flexibility to remunerate themselves using salary and dividends. Yeah, it's becoming less efficient to do so, and the changes to NI that are coming up are going to make it less and less. So I think we kind of touched on that. But if I've not answered that fully, come back to me on private message, and we can take it from there. So I think we're done, guys. That wasn't too bad. Hope it wasn't too painful. Lawrence, thank you for your encouraging words. Lawrence says you're all doing a cracking job. Don't worry about the glitches. So that's good to know. I think they'll probably forgive us this week, but next week, if we're still useless, then it might be a different story. So thankfully, my tech guy, who's also my son, is back in. Is back working, although he's in a different time zone for us at the moment. But he's back working now, so we'll be able to lean on him next week. So it might look cracking, but we'll still have beards, and I'll still be bald, so we'll be fine. But unless anybody's got any final quick questions, I'm just going to check. I think we'll say bye-bye and see you next week, hopefully.
Yeah, it's going to be a weekly thing, as we've probably we've put already on LinkedIn, but just to reiterate, it's hopefully going to be a weekly thing. And thanks, Stu. That's my brother there, giving me some moral support. So that's very nice. Thank you. And spread the word and tune in every week, because I imagine we'll be getting a lot of different questions covering all different areas. And yes, as Alan said, hopefully it'll be more polished and refined and glorious next week.
Glorious, my goodness. One thing that I would say, and I'll just reiterate, I've already said it, and I certainly say that in the posts as well. We understand that a lot of the questions that you might ask, you would prefer to do anonymously, because, of course, you're not necessarily asking for yourself, but people will assume that you're asking for yourself. So if you're asking about, for example, liquidation questions and what have you, I understand you wouldn't want to necessarily put your name against that. So please just DM us or email us. If you're a client of mine or a client of Chris or a client of Mark's, you'll have the contact details that you can send. But other than that, just DM us. We'll, any one of us, and we'll make sure that the questions disseminate to the right person. And what we'll probably do is, in those kind of circumstances, we would probably respond to you by DM, but we'll also bring it up into the next LinkedIn Live that we do as well. All right. Well, good.
Yeah.
Beautiful. I feel like if my kids or anything to go off, aren't we supposed to end this saying don't forget to subscribe or something? But that's not really how it works on LinkedIn, is it?
I don't know. I think we're all too old for this, Chris. We're just sort of, we barely managed to pull this together. So hopefully we'll, you know, yeah, but like, subscribe, share it. You know, all of the good things. Yeah.
As we always say, we'll zig when everybody else is zag. So we're not going to do any of that nonsense. Okay, guys, roll credits. See you soon.
Cheers.
Cheers.